Chapter 8. Why do 95% of market participants fail? The short answer is because they quit when they should be persisting. Where there's a will, there's a way. You heard that one before? It's an old saying. And it's true. Cliches and proverbs are cliches and proverbs for a reason, because they have stood the test of time. There's going to be some of you who will simply coast by this mentorship and move on as if nothing happened. I know that there's going to be a lot of you who will completely transform their trading, as has happened before with the previous ones. But there's going to be some of you who coast by this one, and this message is for them. Snap out of it. Focus. Excuse me, that was the car. Snap out of it, focus, and get professional. We just started the year. Q1 is almost over. And this was recorded before, actually, but I had to redo it right now. Q1 is almost over. And it's a long year ahead of us. And I've given you enough tools, a lot of tools, enough tools to completely milk the year. If you can focus. So I've done my part. My part is showing you the way. My part is pointing you to the road. And your part is walking to it and taking the path that it leads you to. I can't emphasize enough on how important it is to avoid multiple sources of information, focus on one or two max sources which are in alignment, and get to your charts. You will learn the most spending time by yourself in your room or basement or desk or wherever you are, wherever you like to go and practice. But you will learn the most studying by yourself. It's good to have groups. I was at one point 100% against them. I still am. But I understand the importance of having multiple eyes, for example, when it comes to gathering data, when it comes to forecasting. A might see what B missed, or what C didn't have a clue existed, right? So there's power in unity, that's for certain. But when it comes to honing your craft, when it comes to sharpening your blade, then the most you learn is by yourself, alone, in a room, curled up, looking at the screen, and dissecting each and every candle on the charts. Right? So that was a mini introduction speech. And now we delve into the technicals of why a trader fails. Here's a cycle of a failed trader. Step 1, discovers a potential strategy. And this could be many of you. If this is you, pay attention. And the first step to curing a disease is diagnosing a disease. Right? As a doctor, before curing, I have to diagnose. I have to see what's the anamnesis, the medical history. I have to see what's wrong. So if you don't know something's wrong, you can't improve. You first have to admit there's something wrong, and from that moment onwards, improvement may happen. A failed trader discovers a potential strategy. Excuse me. He then takes a strategy, for example, a golden zone fib. He backtests the strategy with a beautiful result of a 100% win rate as goes with backtesting. And a little side note, when I see these absolute goofballs on Twitter sharing the data like they did something, my backtesting strategy yielded me 80% win rate over the 3000 R, it's irrelevant. Backtesting is a tool. It's a means to an end. It's not the end goal. All right? It's important, but more important than backtesting will always be tape reading and live trading, right? Forecasting beforehand, noting down what happened. So backtesting has its place, and it has its importance, but don't let it overshadow, as many do, the importance of live market forecasting and tape reading and actually trading live funds, if you so wish. So, he discovered the strategy. He backtests the strategy with a result of 100% rate. He then tries the strategy in live, in live market conditions. And of course, he fails. He then goes on to abandon the strategy. And if it sounds familiar, this is okay. This is okay. This is normal. But if you reach this stage of the cycle, then you've failed. Which is abandoning the strategy because it didn't work. Which is what most people do, and you want to have a minority mindset because the minority win, right? So this is what the majority do. Strategy, backtest, try, fail, fuck it, abandon. Next. It's a never-ending cycle. And a successful trader cuts the cycle off where he should. A successful trader, this could be you. It could be you right now. I have some killers in this group who joined just to sharpen the blade even more. Right? So if you've succeeded, this is what happened. If you are yet to succeed, then this should be what should happen. You discover a strategy, a turtle soup, which is the only strategy which matters, the market mechanics in the flesh. You backtest the strategy with the results of 100% win rate, of course. You then try it in live market conditions, and this is what differentiates the successful trader from the failed gambler, which is when a successful or to-be successful trader tries in live market conditions and fails, he then questions why. He blames himself, not the mentor, not the strategy. He asks himself, why is this happening? Why did I fail? Why did I mark this gap and it disrespected it? Why did I mark this market structure shift and it just went and stopped me out? Why? What did I do wrong? Because the market is perfect. The system is perfect. The system is perfect. So stop blaming the system. Time and price will always be in alignment with higher time frame order flow. Always. This will never change. The open in a bearish day will always go up for London and break down, and then the shift in London is the trend for New York. That's always going to happen, right? Low, high, lower, low. Expansion leg, higher, high. Leg number 2 is always going to happen. What's not going to be so consistent is your emotions, which is normal. You're a human being, after all. You're not an algorithm, right? So understand that first. The first step is understanding that the system is perfect. You are at fault. It's always the operator's error. Same in medicine. You learn the importance of being the operator and realizing that most mistakes that happen in surgeries, for example, they happen from the lack of experience of the operator or the mistake committed by the operator. Operator error is what accounts for the majority of malpractices in the world, in all clinics, in all hospitals, right? So the system is perfect. Stop blaming it, blame yourself. Stop randomly pressing the buttons for the sake of pressing it, which I know all of us have done. Yes, even me, once upon a time. But some of you, you've made it part of the routine, right? For your trading routine, wake up, press buttons, go to sleep. Stop it. Organize your personal life, because it does infiltrate into your trading. Plan the trades, and thankfully we have an edge. If you're in this group and you've watched the previous chapters, then you have an edge, which is you know that your setups are timed, so you have everything planned beforehand. The only way you can fuck it up now is by not understanding the higher time frame, or not getting the correct higher time frame directional bias, and that's one important thing, and lacking chart time. I've given you the sword, I've given you the weapon, I've given you the tool. Now and I've shown you how to use it. If you're going to actually use it, that's up to you. Clean your room. And I don't say this frivolously or as a joke. I say it seriously, because the state of your room tells me the state of your mind. If your room's a mess, then you probably have 200 tabs in the background of your phone, right? So clean your room, if you have a room. Clean your house. Organize your day. Have some sense of time management. And this drags me back to the previous point of minority mindset. The majority of people don't clean their room, and they have unorganized lives, and they lack time management skills. And of course, the majority always lose in the markets. So that is something to take into consideration. It's not a direct cause, but me, for example, I find when my room is clean and not messy, then I can trade with a clear mind. I'm a Muslim, so when for example, I pray 5 times a day. As a Muslim, you have to pray 5 times a day. So when I pray them on time, then my mind is a lot fresher, as opposed to when I delay one, which should never happen, right? So manage your time. Next up is an image of the stages of the ideal trade. Planning, marking the key level, waiting for the level to hit, executing, and waiting. As you can see, waiting constitutes of 50%, more than 50% of the time spent framing a trade, right? Planning is also a large portion. Executing is a couple of seconds. Enter, press the button, exit the application or the website. All right, so waiting, patience. Chapter 1, which many failed. Patience, patience, patience. Everything is not as it seems to be at first glance. Never judge a book by its cover. Always think at a deeper level. And of course, the mistakes the neophyte will commit in each stage, I'll leave them for you to read. And finally, do you need a trading journal? I always bring up the example of myself, but every profession in life has some sort of a register. Even down to the cashier, for example. He goes and he prints you, they go and they print you gotta be PC these days. They go and they print you the receipt, right? So a register of some form is important if you want to be a professional. And every single professional trader I have ever known, and the best of them, and I've known many, I'm connected to many of them, multi-million dollar traders. Yes, some of them with hedge funds, some of them manage investor capital, but every single one of them has a professional journal. And I've spoken about journaling a lot. You can go to Twitter and search journaling, etc., and you'll see. All right?